What's going on, guys? Tuesday update video. Another relatively sideways day for AMC and GameStop. Once again, as expected, SPY went full retard today, formed another new 52-week high. Once again, I feel like this is a daily occurrence now. SPY just forming new 52-week highs on a daily basis. Let's just jump right into the video, starting with the macro on SPY. Once again, descending broadening wedge for a year. Breakout here, brilliant call by Morons Rants, calling this a fake out, get the rest of the upside to the top of the ascending triangle, at which point Casey Shaw said there's no liquidity in the market, and the market would be crashing. You come down for your retest. At this point, the liberals calling for a market crash, as they always do. Reclaim the ascending triangle here, very sideways towards the end of the ascending triangle. At this point, mainstream media screaming banks are failing, inflation's through the roof, bear market this, bear market that. Break the ascending triangle to the upside, at which point Data Zero called this a bull trap. Another brilliant call. Gap up from that breakout, get upside all the way to 444, pull back to the 20 EMA, and at this point, Data Zero once again, rug pull incoming, another great call. Find a bounce off the 20 EMA, and then more upside here, and another new 52-week high on SPY. Once again, 454.86 today was the high. And I can only imagine what's next. The market correction's over. We're gonna crash, whatever. You know, the same bullshit that I hear every other fucking day. So yeah, SPY is very bullish. This looks fucking amazing. A new 52-week high today. Once again, there are two levels left for all the bears that have not realized that the market's bullish yet. There are two levels of resistance left until all-time highs on the S&P 500. The first being 458. And the second being 470. Two levels of resistance left. There's not much price action up here at the all-time highs on SPY. This looks great. Golden cross on the daily happened about 2 months ago. Day 75 in a row, closing over the 200 EMA. Haven't seen the 200 EMA in over 2 months. This looks amazing. So that's pretty much it for that. Touching on SPY on a daily basis once again, because the previous two squeezes on the meme basket, AMC, GameStop, and the rest, January and June, SPY was rallying to the upside in a very similar fashion to what we're seeing now. And what I mean by that is this. You have this ascending channel here on SPY that pretty much took you all the way to all-time highs. So right here, 127.21, January 27th, the first squeeze on AMC and GameStop, and then June 2nd, the second squeeze right here. So you pretty much just had this ascending channel here that took you straight to all-time highs. And we have the same exact thing playing out right here. So this looks very good. As a matter of fact, the top of the channel right now is lining up pretty nicely with the 460 range, 458, 460 range, which is where we should be finding our rejection and then a pullback. And I mean, theoretically, I'm not sure if this is the case yet. If the symmetry continued to play out from 460, you would be expecting a pullback to 420, roughly, which would be the bottom of the channel here. And actually, the way this played out in January 2021 is you hit the top of the channel and you pull back to the bottom of the channel, which would be the equivalent of hitting 460 and then the pullback to 420. And then from there, you bounce back up to the top of the channel again, which would be the equivalent of this right here, and then come down one more time and form a higher low. So it's possible the symmetry continues to play out. It's possible that it breaks at 460. We have to just see, take it day by day on a daily basis, see how this plays out. But nonetheless, SPY is forming higher highs and higher lows to the upside, the exact same way that we saw in January and June 2021 while the meme basket was squeezing. So this looks very good. Once again, the symmetry on SPY, starting with your blue box here, which would be the middle of the move, your lowest low here. You have one break above the ascending triangle here to retest the macro of the wedge. From that point, you come down into the red boxes where you break below this horizontal line at 380 on both sides. On the left, you came a little bit lower again to retest the macro of the wedge. From that point, you bounce up to 418 on the dot on both sides where you find a rejection. And then from there, you come down to 380 on the dot on both sides where you find a bounce. From there, you have an uptrend to 430, 3 touches on that. Uptrend to 430, 3 touches on that before breaking that to the upside. After that, we were looking for 450. Didn't get the full move to 450. We got to move to 444 and a pullback slightly lower than what we saw back here. From there, you double top slightly higher on both sides. You pull back to the middle of the range on both sides before breaking that to the upside. I was looking for a pullback to 444. Just being that this green circle is playing out lower than it did back here, I was imagining that the rejection that we would find would be lower than we saw back here. But at this point, it looks like we're heading straight for 458. So that's what I'm expecting now, is to get the rest of the move up to 458 before finding a rejection there. So again, perfectly symmetrical move. This looks great. Jumping into the macro and AMC. Once again, descending trend line here from 2017 all the way until you find your squeeze January 2021. Comparably to the descending trend line that we have here from the breakdown in the flag from the June highs, descending trend line here down to where we are today. Again, macro fractal break right here. This gap down that you're seeing right here is your macro fractal break. Comparably to the macro fractal break you see here, you play out that sideways W type move on both sides before actually breaking down into the downtrend. Again, the downtrend, you're just laddering down one step at a time. Green being more or less a W on both sides, the red more or less a cup on both sides, and the blue on both sides, you come down, bounce up, all the way down to the bottom, and curl up towards the end. Same over here, come down, bounce up, all the way to the bottom, curl up towards the end, before dropping to the flat portion here, where you have 1, 2, 3 touches on the bottom, and 1, 2, 3 touches on the bottom. And from that third bottom, you form an uptrend, breaks you out of the triangle, and takes you to your squeeze. So that's what we're looking for now. Again, the other perspective that I show with this, taking the colored boxes off the flat portion, throwing some lines. Again, macro fractal break, the W that plays out, macro fractal break, the W that plays out. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Takes you into the blue in both cycles. From that point, you drop to the flat portion where you have 1, 2, 3 touches on the bottom. From that third touch, again, you're forming an uptrend, breaks you out of the triangle, and a straight line into your squeeze. So from the 6 point over here, come down to the flat portion, 1, 2, and 3 touches on the bottom now, and now in the uptrend. So we're looking for the rest of the uptrend to finish playing out, break us out of the triangle, and a straight line into our squeeze. This looks very, very good. Getting into the micro now. I don't have the colored boxes on this. I don't know why I didn't feel like doing it. So again, this would be the orange. You know, same story. You know, for the micro, what we're doing here is looking at the orange, purple, and blue box, the flat portion here, comparably to the orange, purple, and blue box here. Both flat portions is what we're looking at on the micro. Now, again, the current flat portion that we have here is playing out on top of the previous flat portion as support. So we're playing out the exact same thing that happened leading up to the squeeze in January 2021, playing it out again, except on top of this range, acting as support now. So into the micro now, and what we're looking at, you come down to your first bottom here where you have this chop at the bottom of the range, your first bottom. Over here, same story, coming down to the first bottom, you have that chop at the bottom of the range. And from there, you bounce off and get 3 peaks in increasing height, 1, 2, and 3. And over here, same thing, 1, 2, and 3, 3 peaks in increasing height. From that point, you come down, break below that horizontal line I've spoken about multiple times on both sides. You break below it, you bounce above it, break below it, bounce above it, and then from there, you get your second bottom on both sides. From the second bottom, you bounce again, get into the tri-peak on both sides, and then from the third peak of the tri-peak, come down one last time to your third bottom, as we did over here. You bounce off of that, form a very slight uptrend here, which takes you to your breakout and your squeeze. So that's what we're looking for now. And we would be in this iteration here. This pop off the bottom, you get this pullback, and now looking for the breakout iteration, this right here, this gap up. That's what we're looking for now. So the third bottom, and then the pull, you get the pop, the pullback, and now looking for this pop. More than likely will be a gap up, and that will be our breakout iteration. Once again, we're tracking this roughly 3 months faster. In the January 2021 cycle, from the start of this until your third bottom, 320 days, and then in our current cycle, from the start to our third bottom, 204 days. So roughly 3 months faster on the tracking, and once again, from your third bottom until your peak was 22 days. So that is the micro. Getting into the daily gaps now. Again, I don't have the colored squares here. It's fine. Everything's the same, flat portion on both sides. The gaps are labeled by these flags. You have them in the exact same spot on both sides. So you have your 3 black flags right here, comparably to these. The 2 green right here. This would be the purple cup on both sides. You have the 2 green flags here. And then 1, 2, 3 gaps down. 1, 2, 3 gaps down. Your tri-peak. From your third peak of the tri-peak, you start coming down. You get one final gap, as we did here, which takes you to your third bottom, and then you form this uptrend. And once again, we would be in this iteration here, looking for this blue flag. So again, looking for a gap up to the $5 range, that would be our breakout iteration. So that's what we're looking for. Nothing's changed. The daily EMAs, once again, this time I have the colored boxes. I don't know what I was doing when I made this video, but whatever. Alright, so 20 EMA in black, 50 EMA in red. The 20 in the orange is starting under the 50 the whole time, and then you get this wave move where you pop above it, come underneath, pop above it higher at the end of the purple, and over here, same story. Floating under the 50 here, and then you pop higher under at the end of the purple. From that point, you cross the 50 to the downside once again on both sides. You cross the 50 to the upside in the middle of the tri-peak on both sides, and then from that, you come underneath one more time, which would be where we are now. And again, the EMAs are also confirming where we would be on the macro. From the third bottom, you get this pop here, and then the pullback, and you're fighting for the 20 EMA. And the exact same thing here. From your third bottom, you get the pop and the pullback, and now we're fighting for the 20 EMA. Again, just being redundant, we're looking for this gap here. This gap up right here is our breakout iteration. Should be gapping over the 20 EMA and over the 50 EMA, and trading at the 50 EMA for some time, around $5 before we get our macro fractal break, which will be a gap up to the top of the tri-peak around $6 and the 200 EMA. So this looks very good. Again, the RSI is identical on both sides. You have the flat portion of the January 2021 cycle on the left and the flat portion of the current cycle on the right. All three bottoms, 1, 2, and 3. All three bottoms, 1, 2, and 3. And everything is color coded here. And I threw some numbers down here on the RSI as well. So you have the breaks above the overbought. You have the breaks below the oversold on both sides. So the orange, you have 2 breaks above here. The orange over here, 2 breaks above. You have your first break below there as well. From there, you come down, get your second break below in purple. Same thing over here, second break below in purple. Bounce up from there, you get your third break above in the purple as well. And then from that point, you come down, get your third break below here in the red, as we did over here. You bounce up, come down to your fourth break below, as we did here. Bounce up, come down to the fourth break below at the start of the green on both sides, and then you get your fourth and fifth pops through the overbought on both sides in the green. 4 and 5 right there, 4 and 5 right there. From there, you come down, bounce up one more time, as we did, and then your fifth and final break below oversold in the blue, which would have taken you to your third and final bottom, as we have it here. And then from there, you pop up, and you get this pullback in the RSI, the same exact way you see in the price action. You get this pop up and this pullback, which would be the equivalent of where we are now in this box that's labeled here, comparably to this right here. From your third bottom, you get the pop and the pullback in the RSI, and the exact same thing here. Again, fighting for the 20 EMA, as we saw in the previous cycle, and looking for this gap up right here that will be breaking us out of the triangle. This looks very good. So that is the RSI. Once again, touching on the daily, this is the past year of price action that we've seen on AMC. August 2022 here, where the 8th dividend got dropped, until present day. Again, very clearly curling to the upside here. You could very clearly see the curvature, and all 3 of our bottoms are labeled here, 1, 2, and 3, and all 3 of these bottoms are forming higher lows. So you have this support on the bottom forming higher lows, and we have this resistance up top, and the support and resistance here is pinching tighter and tighter every single day. This range is getting smaller and smaller. It's roughly a 60-cent range is the macro support resistance on AMC. Roughly 405 to 470 is the support and resistance, the macro support and resistance on AMC. And again, curling to the upside here. So more likely than not, when we break this triangle here, this will coincide with our breakout of the macro. We will break out of this to the $5 range, more likely than not come down, retest on this before gapping up to $6, which would be our macro fractal break, and then a straight line into our squeeze. So that's that. Again, the move is symmetrical. So over here on the left, looking at the W that played out leading up to the squeeze January 2021, the W here with the tri-peak, your second and third bottoms, comparable to the second and third bottoms you have here, and your tri-peak in the middle. Again, a very symmetrical move. The tri-peak is the middle of the move. You have your left leg of the W, your right leg of the W, bounce up, come down and up, bounce up, come down and up. And then on the right side, obviously, is your squeeze. These 2 gaps here is your macro fractal break to the top of the tri-peak. But first, we're looking for this gap here. Once again, looking for this gap here, which will be taking us to the 50 EMA. And at this point, the 20 EMA will be crossing the 50 to the upside. I forgot to mention that. The next time the 20 EMA crosses the 50 EMA to the upside on the daily, we will be in the middle of our squeeze or already squeezing. So that's what we're going to be looking for. Again, looking for this gap here. We'd be in this pop and this pullback, fighting for the 20 EMA, comparably to right here. And again, we're looking for a very symmetrical move, as we saw back here. And the equivalent would be a pop to $5, roughly 520, 530-ish, which would be the equivalent to this. Come down for your retest, and then the straight line up from there. So that's pretty much that. The current range, pretty much going over today's price action. I'm not going to, it's nothing crazy. We poked through resistance again, rejected it again, came back to the middle of the range, and once again, we're just sitting at the middle of the range. I mentioned in my previous video that more likely than not, this would play out as a symmetrical move, and it's looking very symmetrical now. So once again, the third bottom here, you get this pop off, where now we're fighting for the resistance at 450. So you break through there, come down, bounce on the previous range as support, bounce up, break through again, reject again, come down, again bouncing on the previous range as support. You bounce up to the middle of the range, reject. That's when we got the lower low, nasty bounce off that. Reclaim, you have an uptrend all the way back up to the top, poke through again, reject again, poke through again last Friday, again you reject, come down to the middle of the range, and then consolidating at the middle of the range. Today we poked through again, high of the day 454, again rejected this range up here, and then came back down to the middle of the range. So we've been sideways in this range for almost a month now, which is fine. We're just waiting for the gap, and more likely than not, we're going to be seeing that either late this week. I would imagine if it was this week, it would more than likely be on a Friday, but more likely than not, I think we're going to be forming a very slight uptrend here until end of week, which will close us around 450, 460 range, and then next week we will be seeing the gap up that we're looking for, the breakout iteration. And this also ties into GameStop as well. AMC and GameStop are the exact same stock. Again, the same exact movement here, your January squeeze. GameStop is the line chart in the orange, and AMC is the candles underneath. So here's AMC squeeze in January, comparable to GME's. You come down, you get this pop here in the middle, comparable to this. You form the cup into the June squeeze on both sides, and then just following the line here, comparable to the candles in AMC. GameStop is tracking AMC perfectly. It's the same exact stock, it's the same exact movement, and we'll be squeezing at the exact same time. And that squeeze, more likely than not, will be MOAS. Once again, here is GME's flat portion comparable to AMC's. And I mentioned in my last video as well, this final iteration of GME, you're curling to the upside here. Very similarly to AMC, the final iteration, we are curling to the upside here. Again, the middle of the move is right here, this W. You have your left shelf here, you have your right shelf here, and the symmetrical equivalent on the right side we're looking for is the straight line here. So your W is the middle, left shelf, right shelf, straight line, or looking for the straight line here. That will be the squeeze and more than likely the MOAS. Same story for AMC. The W is right here, your left shelf, your right shelf, and now looking for the straight line here. AMC and GameStop will be squeezing at the exact same time. They're the same exact stock, and that is pretty much that. Just went over that. GameStop support and resistance. I went over this yesterday as well, where AMC as well, I'll show it again. AMC's support and resistance on the macro is pinching tighter and tighter on a daily basis, really getting into a tight range here. Support is meeting resistance very soon here. So AMC is pinching down support and resistance on the macro, and GameStop is as well. And I mentioned yesterday, the range on GameStop was roughly 2370 to 2280, I believe. I could be wrong. But I know the top was roughly 2370, and that's where you saw your high today. Actually poked through on GameStop and then found a rejection off. And again, support is meeting resistance here on next Tuesday. So I'm expecting a move on AMC and GameStop next week in not a huge way, but that move will be big in the sense that it will be our breakout for both AMC and GameStop. The macro break more than likely will be happening next week. So this looks very good. Again, the symmetry here, the W is the middle, left shelf, right shelf, about to break out and looking for the straight line here, the symmetrical equivalent on the right side. I think that's everything that I wanted to talk about today as far as my charts go. I could just throw this in here as well. AMC's OBV, once again, no one is selling. So the macro on AMC you have here from 2017 down to your January squeeze 2021, and then the June squeeze and the current cycle, all the way from 72 to $3. The OBV is flat. So you get the first pump in the OBV here in the January squeeze, flat there. The June squeeze you pump even higher on the OBV, and from $72 all the way down to $3, OBV is completely flat and actually near all-time highs. So no one's selling. This is complete bullshit. This is the algorithm doing what it's going to do, running us on a loop. We're about to squeeze in the very near future. And comparably to my bank of my HVAC company, I mentioned this in my other video as well, here's the OBV of an actual pump and dump like a bank. This is Signature Bank. All-time highs around $375, and then from $375 pretty much to zero. And that would be the tank in the OBV right there. You could see the OBV just completely fall off a cliff here. You have a pullback, decreasing price action, and OBV falls off a cliff, comparably to AMC's OBV, where just from June 2nd, 2021, just forming lower highs and lower lows all the way down, and the OBV is completely flat. So no one's selling. One thing I will mention once again is that, to all the people screaming market crash this, market crash that, you're not wrong, but we will be seeing all-time highs first. And I mentioned this in one of my previous videos as well, that SPX, S&P 500, has a repeating pattern that dates back to the late 1800s. So again, it's blue, green, megaphone, bull run, blue, green, megaphone, bull run, blue, green, megaphone, bull run. Once again, in all megaphones, you have 3 touches on the top and the bottom. 1, 2, 3, 1, 2, 3 there. Over here, 1, 2, 3, 1, 2, 3 there. And then over here, 1, 2, 3, 1, 2, 3 there. Each megaphone, you break to the upside, come down and retest. So that's the breakout retest there, the breakout retest here, and the breakout and retest here. Again, the blue boxes are more or less a correction period. It's a sideways correction period, a W more or less. So just starting from the beginning here, your sideways W that you have here, you break that to the upside, you get the wave in the green, and then you get your megaphone, 3 touches on the top and bottom, you break out, retest, get your bull run, and then from there you have the Great Depression, the Great Crash, 90% correction here, all the way down to the previous blue box here, and then again your W, your sideways W move before you break this range to the upside. You get the green wave move, you get into your megaphone, again 1, 2, 3, 1, 2, 3 touches on the top and the bottom before you break and retest on that. Again, another bull run from there, and then another correction period in blue here. You get the sideways W type move, break that to the upside, get the green wave, get the megaphone here, 1, 2, 3, 1, 2, 3, your breakout and retest. So from all-time highs on SPX, SPY, S&P 500, whatever the fuck you want to call it, from all-time highs, that descending broadening wedge that we had that took us all the way back down really was just a retest, and we bounced off and now heading for all-time highs. Once again, we're 2 levels of resistance away from all-time highs, and we will be seeing all-time highs. So one other thing while I'm here, so the Great Crash or Great Depression, the blue iteration here took you down to the previous blue, and the 2008 financial crisis here, aka the Big Short, theoretically should have taken us down to the previous blue box, as we saw right here, but it never did. And more or less, this financial crisis was a double bottom on the market, and then never came down and just continued rallying to the upside. So I do agree there will be a market crash, and it will probably be very drastic. I mentioned in my previous video, there's an open gap here at $20 on SPX, monthly chart. Monthly chart, one open gap all the way through this, and it's at $20, and coincidentally lining up with where the 2008 financial crisis should have taken us for a correction that never happened, and instead just continued rallying to the upside. It's possible that MOAS is that market-breaking event that will be taking us all the way down for our correction. That's pretty much it. Again, each iteration from the start of the blue to the end of the blue is playing out faster. 810 months here from start to finish, 700 months here from start to finish, and the current cycle is flying 131 months and almost done. So almost at all-time highs, and then from all-time highs should be seeing a correction. And that correction, more likely than not, will be MOAS and the market just completely failing along with the rest of the global economy. So that's pretty much it for the video. I wouldn't expect too much on AMC for the rest of this week. I wouldn't expect too much on GameStop for the rest of this week. SPY, more likely than not, we'll see 458 tomorrow. And more likely than not, we'll reject there. And that is pretty much it. I'm looking forward to next week. I could really give a fuck about this week until I see a gap. Like the way that I'm looking at this personally, on a daily basis right now, you know, having covered this where all the gaps are the same. If I don't see a gap, you know, after hours or pre-market to the upside and to the $5 range, for me, the day is chalked. I don't even look. I wouldn't even bother looking until, because more likely than not, this will be a gap up. It's not going to be an intraday move. More likely than not, it will be a gap up, and that gap will more likely than not be on a Friday or a Monday. So that's pretty much it. You know, possibly sideways in this range for the rest of the week. So I wouldn't expect too much. And then GameStop, same story. Where is it? GameStop, same story. Support is meeting resistance next week, early next week, Tuesday here. So I would not be surprised to see GME just go sideways here. Honestly, I wouldn't be surprised if it broke out either, but I wouldn't expect like a crazy amount of upside from the breakout here until next week. So that's pretty much it for the video. I'll catch you guys in the next one, and that is it.